Hello, my name is Chad Hart. I'm an extension economist with Iowa State University. And today I'd like to share with you an update on the agricultural markets. Here in September is when USDA usually uh, releases their first look at the objective yield survey, where they go out into the fields and look at the crops. And what we found is that they did find that both the corn and soybean crops were smaller than anticipated due to the weather extremes that we've seen throughout this year. Now, as we run through the numbers here, what you'll see is that on the far right-hand column, I've highlighted the changes that USDA has made month over month as we're looking at the various markets. And in the case of corn, what they really found was that, we're looking at not only smaller amount of acreage out there. In this case, the acreage adjustment is due to the incorporation of data coming from the USDA Farm Service Agency, which sort of certifies acres for government programs. So we did find fewer corn plantings as we looked out there. You combine that with a cut in the yield, here a case of a cut of about nearly 3 bushels per acre. So a sizable cut there, and that leads to a fairly significant drop in production, cutting production by 415 million bushels. So we have seen the corn overall production number drop below 14 billion bushels, making it one of the smaller crops we've seen over the past few years. In fact, it's getting comparable now to the crop that we saw back in 2019. So we do see those supplies shrinking as we're going forward. The challenge for the market, though, is that USDA also sees usage for corn declining as well, and that usage decline is fairly broad based. In that, usually when we're looking at corn demand, we think of the big three: feed demand, ethanol demand, export demand. And in this case, all three of those took some cuts as we looked at this month's update. In fact, the cut start for the old crop for 2021, they ended up taking a few bushels out of ethanol as we're looking there for the 2021 crop, but they also adjusted it for 2022. We do see that the feed number came down 100 million bushels. The export number came down 100 million bushels, and ethanol came down another 50 million bushels there. So we had 250 million bushels worth of demand also dissipate over the course of the month. But since the supply cuts are bigger than demand cuts, we do see the market continuing to tighten. So ending stocks getting down around 1.2 billion bushels. That has created a much tighter situation here, which means we're looking at prices strengthening as we go into harvest. In fact, as USDA looks at that season average price for the 2022 crop, they bumped that up 10 cents to $6.75 a bushel. And the market reaction today was positive to this report, as well as the market trade on the futures market bumped up in that 10 to 15 cent range as well. Now, if we look at a soybean crop, we see a very similar pattern here in that they ended up reducing acreage yield, so the supply side shrank. And we also see that same thing happening on the demand side. And so it's a very similar tale where we're looking at, for the 2022 crop, about 500,000 less acres than we thought we had planted last month. The yield down nearly 1.5 bushels per acre. So we're looking there at a 50.5 bushel per acre average across the nation. That drops down supply by over 150 million bushels. So we're still talking about a fairly sizable soybean crop coming in this fall, but it's not quite as robust as what we thought just a month ago. Now, that has the result of tightening those supplies by over 130 million bushels. But we saw that same sort of cut in demand as well, with domestic use crush here down 20 million bushels, and export demand cut again, both not only for 2022, but also back here for 2021. So you see 70 million bushels being reduced out of the 2022 crop. That's bringing down the total usage down by nearly 100 million bushels. So just as with corn, the supply side was cut back a little faster than the demand side. So ending stocks declined. And in this case, USDA held to their price series, but the futures market reacted much differently. We saw significant upward price movement in soybeans for this report, mainly because the trade had been expecting yields to hold fairly similar to what they had been estimated at last month, as opposed to seeing this sizable cut in yields as we're looking at what USDA finally put out there. Now, in digging through the numbers, what you see is that as USDA updated their numbers based upon not only a farmer survey here in September, but also the objective yield survey where they do go out in the fields, you can see that most states here colored in some shade of red had their yields reduced month over month. In fact, as we look here in Iowa, we saw the number move from 205 bushels per acre down to 200, so a fairly significant cut. And as you look at the other states around the region, only Illinois basically held on and it saw a slight increase in the yield estimate there. And so it's not surprising that we saw the national corn yield estimate being taken down fairly significantly based on that. And a lot of this reduction in demand or in yields is due to the problems that the drought caused throughout the year. But you could argue that these were problems that were sort of hidden. If you drove by the corn crop, it looked fairly decent. It's not until you get to really analyzing that ear that we do see the more significant challenges as it comes to corn production this year. Now, given that USDA is out in the fields, they were able to count the number of ears that they see out there in the objective yield survey and compare it to previous years. And what they found was that this year we are seeing fewer ears out there per acre than we saw last year. In fact, we're sort of similar to what we saw back in 2020. And these red dots represented on this chart also show you the yield that would come from the ears that they examined this month. And what you can see is that that yield number was below what we saw last year as well. So again, the cut's not surprising here. In fact, I would argue that the trade was sort of expecting it on the corn side. What they weren't expecting, though, was what we saw with soybeans. Now, nationwide, like I say, a significant reduction in yield. And you can see most states are shaded red on this map as well, meaning that USDA adjusted those state level yields down. But as we look at here in Iowa and Wisconsin, these later season rains have helped fill in some of those bean pods, and that actually gave USD some latitude to raise the Iowa corn or soybean yield up by a bushel per acre, up to 59 bushels as we look out there. And you can see down in the southeast, we see some improvement there as well. The main thing again is that as USDA looked at the soybean crop nationwide, again, we're seeing fewer pods like we were seeing fewer ears on the corn side. And so with less pods to work with, that leads to a lower yield estimate as we look out there. Now, what's interesting to me on this chart is, you can, again, you'll see those red dots there. As they looked at the yield given the pods that they saw in the fields that they examined, they would say the yield there is comparable to what we saw last year, but the number of pods is not. So that does seem to suggest that the pods that are there are filling out really well. It's just they're fewer of them, and that's bringing down that soybean production estimate as we look across the nation. Now, in looking at the global situation, the idea is that the U.S. crop has shrink somewhat significantly here, but we're seeing some, if you will, let's call it a bounce back in terms of production outside the U.S. In fact, as we look at the foreign total here, which basically looks at everything outside the U.S., the numbers are still down year over year, but we do see the estimate for this year going up by about 3.5 million tons. And some of that growth is in areas close to us, such as Canada, looking at a slightly larger corn crop this year than we first anticipated. We also see some growth in the Black Sea region, especially coming out of the Ukraine. Still not quite what they had before, given the war, but again, better than what we thought when the war first started. But probably the biggest movement here is in China, as we have seen some better weather conditions over the northern half of China, and that's the main corn producing region in China. When we're looking at soybeans, again, we see the US number coming down and the foreign number sort of bouncing up here. The idea is not a complete offset here, but it just shows that when we're looking at the soybean market worldwide, we are going to see more competition for that export space, and that is being reflected in USDA's downgrading of our soybean export expectations as we look forward over the next 18 months. Now, digging a little more detail on the demand side when it comes to feed demand for our products, The issue here is really the shrinkage in the cattle herd as we look out there. USDA did not find reason to move the cattle numbers much within this month's updates, and so we're looking at a very flat feed situation as we look out there. And in fact, if anything, maybe slightly declining because of feed efficiencies as we're looking across the country. When we're looking at ethanol, as mentioned, USDA brought those numbers down a little bit as well, and it's sort of based on the slide that we've been seeing over the past 5, 6 weeks. Normally, the summer season is the driving season when you think about, gasoline and ethanol usage here in the country. And so as we enter fall and winter time, there is this expectation that things will slow down in the fuel market, and that's having a feedback loop here, lowering that corn usage estimate for ethanol. And so when you put this all together, what we had was a fairly strong day on the markets, reacting to those supply cuts being a little bit bigger than those demand cuts as we look out there. Corn, it popped back over $7 as we're looking at the nearby futures, but definitely holding above 650 as we're looking throughout the 2022 marketing year, and holding above $6 as we look out to 2023. So a very strong price outlook here provided by the futures market. And like I say, we were up anywhere from 8 to 15 cents as you looked across the contracts here on September 12th. When you're looking at soybeans, we saw an even larger movement here, anywhere from 40 to 75 cents a bushel higher, with the higher price movements being on the nearby contracts. As you can see here, the September contract is approaching 1550 now, but as we look out in those new crop futures, holding well above 1475 until we get out to basically the middle of next year, and even approaching $14 as we look out into the spring and summer of 2024. So the markets are responding to the lack, if you will, a lack of production, or the cut in production due to the drought conditions out there, building back in some of the higher prices that we saw earlier this summer, but still not quite reaching the levels of the peak that we saw this summer. And I'm going to suggest that that's probably the pathway as we're looking forward here, is that we'll continue to see some gains as we move through the fall here, but we probably don't quite reach the peak that we had back in April and May, as we were sort of caught up in both the storyline of the drought impacting production and the war impacting global demand. So that's the update as we're looking here in September. There'll be another update as we look into October. USDA, of course, will again do their surveys looking at what yield potential is out there. And given that these crops are accelerating in the harvest, I think we'll see some more significant movements as we look there as well, because there'll be a lot of the crop being harvested at the time that USDA is doing their survey. So we'll have some fairly firm numbers on how the drought has truly impacted production. With that, I want to thank you for your time. Again, my name is Chad Hart. I'm an extension economist with Iowa State University. Have a good harvest season.